Host Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite in Times Square, we have Kevin Mann, who's the president and CIO of Henyon and Walsh Management. Thank you so much, as always, for joining us at MarketSite. We have a lot to get through here, and it seems as if the first quarter of 2019 certainly marked a rebound.
Yeah.
What are you looking at going into Q2?
Well, we had a very strong start coming out of the gates with the best January in over 30 years and the best month for the stock market. Going back at least 3 years at that point in time. We had somewhat of a follow through in February and March, but what we've seen since the end of the first quarter, we saw earnings come in stronger than expected. With about 10% of companies reporting thus far, we've seen 83% of those beat, and those that have beaten rather significantly. We're seeing a confident consumer, and that's coming through in those earnings report. And now we have talk of GDP for the first quarter perhaps being in that 2.25% to 2.5% range. Nobody was thinking that just 3 weeks ago.
Right. Well, it's interesting what you say about earnings, too. Estimates were so low that you're going to have these upward revisions coming as well, which could potentially be a catalyst. But we keep hearing about how the U.S. is the best house on the block. Emerging market equities, you think, might have some upside.
Yeah, even during the first quarter, emerging market equities were up 10% for the quarter. International developed market equities were up 10% themselves. And that's in the face of a very uncertain future for Brexit. And then, of course, the fact that Angela Merkel is not going to run for another term in Germany. So there's a lot of uncertainty in Europe, yet they moved ahead 10%. But if I can borrow from a Wayne Gretzky analogy, if you will, Jill, in investing, you want to skate to where the puck is going to be, not to where it is right now. And although we're optimistic for future stock market growth in the U.S. this year, as we get into that more politically volatile re-election environment next year, I think emerging markets is going to be a place where you're going to want to have some exposure.
Right, and another theme that we've spoken about over a number of quarters is slowing but growing.
Yes.
Doesn't mean growth is stopping, it's just taking a step back.
Absolutely, and I think we've hit peak rate of earnings growth. We saw a couple times last year in the second and third quarter where earnings grew at more than 20% on a year-over-year basis. We saw GDP grow at 3.5%, even over 4% in one particular quarter. So we're not going to hit those levels in 2019, but we're going to continue to grow as we saw with earnings in the first quarter and as we're now seeing with economic growth. And we believe that that combination, along with the more dovish-leaning Fed, should be constructive for stocks.
All right, and you know what? We always talk about this as well. Diversification is critical.
Absolutely. There's still so much uncertainty out there. We all believe at this point in time, and I think the markets have priced in some form of a resolution between the U.S. and China, likely in May. But I don't think that's going to be the final conclusion just yet. So there's some more uncertainty there. Clearly, the presidential election, we've heard some discussion around universal health care. That's impacted healthcare, that's impacted biotech. But with all that uncertainty, of course, creates opportunities. But diversification is going to be critical as always, Jill.
All right. Look forward to catching up with you in Q3. Thank you as always for joining me at MarketSite.
My pleasure.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.